Hello to everyone and welcome to Energy Capital News. I'm Ana Tafoya and today I'm with Andrew Gilligan, Vice President for Sol Latin America and lead Sol Customer Solutions at Sol Systems. He would talk with us about viability, opportunities, collaboration, and transparency in solar projects. Andrew, thank you so much for being with us today. How are you?
Yeah, thanks, Ana. It's a pleasure. I'm good. Excited for the Thanksgiving holiday here in the States and excited to be with all of you today.
Thank you very much, Andrew. So I'll start with the first question. In your experience, how would you describe a financially viable solar project?
Sure. I think when you think about a financially viable solar project, there are a few key stakeholders that each essentially need to have an economic incentive to do the deal, right? Not surprising. But first, we always start with the electricity offtake. So we're developing, we're financing, we're building a solar project. Someone needs to buy the power, right? The kilowatt hours, the electric for it to be valuable. And typically we say for the offtake to be economically interested, we need to be able to show them, let's say, at least 10% savings, right? So that's one stakeholder, the offtaker. Can you get them 10% savings as part of the solar project? The second stakeholder, the way I think about it is the investor, right? Solar projects, large ones, will cost hundreds of millions of dollars up front. You'll use project financing. And then over the next 30 years, the project will pay back that investment. And so the next question is, can it produce, an acceptable return for that upfront investment? Typically when we think about solar projects now in mature markets on an unlevered after-tax IRR basis, maybe if you're in the 6 to 8% range for a project, that's like an acceptable return, and there may be financial structuring after that. But if you've got that's good on the investor stakeholder piece. And then the final key stakeholders are probably the developer and the construction company. Sometimes that's the same entity. Other times, like with Sol Systems, we'll develop the project and then hire a construction company. But the question for those entities is, will you generate enough margin, by doing the deal? Developer, maybe on average, that's 10 to 15% margin. A construction company, since you're taking on, less of the upfront risk, maybe that's an 8 to 10% margin. But do you project to make that, assuming the project goes according to plan? And then so if you can bring all those pieces together, like, yes, we can save money for the company that's going to be buying electricity, whether it's utility or corporate. Yes, an investor can get an acceptable rate of return. And yes, the developer or construction company can make money given how much it will cost to build the project. If all those things, check off, then essentially you have a financially viable solar project. Of course, in certain markets or certain types of contract structures, you may want a higher rate of return, right? There may be more risk in the deal, but those are some baseline numbers that allow us to say, like, yes, we have economic incentives for everyone to do this deal, or, no, we don't, and something needs to change, whether that's prices need to keep coming down or something else, another revenue stream needs to materialize for the project to be financially viable.
Why are communication and transparency with local communities crucial in large-scale solar array projects? Could you provide us an example of Sol Systems experience?
Yeah, absolutely. And not surprising, they are critical, right? And likely everyone listening will know, of course, a solar project is a big infrastructure project, right? It's an energy project. And so coordination and transparency with the community where this asset is going to be for the next 30 to 40 years is not surprisingly is key. And I think the way to think about solar is certainly the community needs to be bought in and not opposing the project, like all infrastructure projects. When you go for the special use permit or essentially, the permission to essentially construct that infrastructure project, solar, like other ones, we'll need to ensure that the community is in favor of it. Sol Systems, we have experience with that. I think a great one is the project we mentioned to you. We call it Project Phoenix, but it's a project right here in DC, essentially, just outside DC in Capitol Heights in Prince George's County, Maryland. So it is on essentially a piece of land that has a lot of residential houses around it, right? But it's a land that has been used as construction weight previously and essentially deemed unsuitable for further residential development. But we decided to build a project here, and we'll be delivering the power to Under Armour But, there's a lot of residents around that, right? So starting probably 3-4 years ago, we were knocking on doors, attending local meetings, sending notes around via email, just to let all the residents know, hey, our plan, we would like to put a solar project here. Here are the benefits. The county will receive tax payments, right? There's going to be local jobs created. Certainly there's a lot of benefits for this community, but we also didn't want to assume that because of that, all the residents would be fine having a construction project happen close to their homes and then having solar panels there for the next 30 years. But taking that approach, and coordinating with the community up front, allowed kind of residents to ask questions. We answered them, and from the beginning, the community was in support of the project. So that's the first way, an example of how solar companies need to think about developing projects within communities, which I would, compare it to other infrastructure and energy assets, certainly. The second thing I'll say, though, is I think for solar, there's actually the opportunity to really have a community as your ally and driving force in why the project happens, right? If you look, whether it's in the US or really any market, the vast majority of the public is very supportive of solar energy. And development of solar energy. There's not environmental side effects of having like a solar plant near your residence. It creates good local jobs. It's an economic engine. So oftentimes actually communities are quite supportive of solar projects. And we've seen the drive in from the community, them lobbying their city or their county or even their utility, like, hey, we want a solar project in our community. So actually with solar, I'd say more so than a lot of infrastructure assets, not only, it doesn't have to be just making sure the community is okay with it, you can actually use the community as an ally because of the environmental and economic benefits that solar projects will produce for the community. So we've seen a lot of that, especially even just in the past year or two, as the broad public is familiar with solar and the costs of solar are quite competitive. That's been a really exciting development that I think is only going to increase and continue, right? That community is actually being the driver for new solar projects.
Which is the role of collaborating with companies regarding the development, execution, and operation of a solar project?
Yeah, it's key, right? I think, Soul Systems, we're the developer and we're the long-term owner and operator. We finance these projects, but we need to understand, again, going back to the first part about all the stakeholders involved, from the investor, from the offtake, and then the second question about communities, we need to understand how everyone's thinking and what folks want to get out of the deal, because we'll be the one to collaborate and bring it all together, right? And I think one interesting thing is that historically, probably for the past decade, either corporates, we work a lot with corporates like Amazon or Walmart or Microsoft. These entities set certain renewable energy goals, like, hey, we want to have 100% of our electricity come from renewable sources by X year. And also within states or even countries, there were goals, what's called renewable portfolio standards, set for certain renewable targets. So for a long time, the goal was like, hey, if you're developing a solar project, that is a positive thing. It helps in this fight against climate change. I think increasingly we're noticing that corporates and even investors are interested in, yes, we want to deploy money and make commitments towards renewable energy, but we also want to do it in a way that helps the community, right? And so it's not only a climate justice impact, but there's a social and community impact to it. And so I see our role as the developer as being responsive to that trend, right? So working with the off-taker or working with the investor, hey, how can we not just, develop and finance a solar project, but how can we develop and finance a solar project that will also have direct benefits for communities, whether that's job creation, job training, just direct payments in the form of tax or additional payments to underserved communities. There's a lot of ways to structure it, but at Soul Systems, we recently announced a 500 megawatt PPA with Microsoft, where we're going to be delivering a lot of clean electricity to them, which is good, but it's also going to be structured so that we're siting the solar projects in areas that have been underinvested. Maybe it's an area where they used to be close to a coal mine, or it's in certain areas that have just higher unemployment, and essentially developing projects in those areas intentionally so that the investment and the deal with Microsoft can have both a sustainability and kind of a community impact focused motive. So I think that's an exciting trend that kind of we only know because we're talking with investors, we're talking with corporates, and figuring out, what they want in addition to just electrons and renewable energy.
That's great, creating a corporate responsibility, right?
Exactly. And I think, and corporates are really emphasizing that too. So it's not as though we're creating the demand, we're just understanding that. And I think on the investor side, I think investors certainly have certain return targets because you're investing in an energy infrastructure asset, and solar produces great returns. It's very consistent, the technology's proven. But at the same time, I think we are seeing investors saying, hey, we like investing in solar. Maybe we'd accept a little lower return, or a slight reduction in our expected yield if we can also see additional community benefits. So I think we're listening and talking with the investor community as well about that.
And from Sol Systems' experience, how can solar companies seize opportunities in unused lands, like in Capitol Heights?
Yeah, it's a great question. And as mentioned with the Microsoft example, it's something we think a lot about. There's a lot of land, and especially in the US, which is the market we know best, that is, not being used for anything right now, right? Whether it's, landfills, former brownfield sites, maybe even, in urban areas, there's like warehouses or parking lots that aren't being used. Maybe you have a retired coal plant somewhere, right, where they still have even an interconnection agreement, which will allow you to then more easily connect to the grid. There are a lot of examples, I think, throughout this country that there's a lot of land that solar can be the economic engine, and that can be really a great story and great benefit for the community. I think for developers to take advantage of that, you probably do need someone else bought in. And I think the reason I say that is, not always, but sometimes it can be, for example, more costly to build on that land, or maybe that land is not as close to large areas of power demand. So if you were ignoring that part of it, maybe you end up picking the cheapest land that's closest to a big data center. But if you work with, whether it's a corporate like Microsoft or a state government, for example, in Massachusetts and Maryland, the state governments there have basically said, we will, if you put a solar project on a landfill, the state will give you additional money for it. So developers have worked with the governments, whether it's at the state, local, or federal level, to understand, hey, we all will benefit if we can use this unused land for solar. So why don't we structure it to kind of incentivize development activity there? So whether it's the offtake, the investor, or even the government, I think developers can closely work with those stakeholders to figure out, all right, it might be a little more expensive. We're not talking, double the cost, but on the margins, maybe it's a little more expensive to build on a landfill and maintain a solar project there versus a greenfield. However, if we all can kind of agree and quantify some of the benefits of using this land that you can't really use for anything else, then that will create the incentive to develop there. And you're seeing that happen. So I think a lot of that is just continuing to have those conversations. And as we grow as an industry, state governments, federal governments, all recognizing solar as a major player that can create really a lot of economic growth, which is great.
How do you think has COVID-19 changed the future for renewable energy and solar projects?
I think, and certainly, no one knows for sure, right? But my perspective would be that COVID-19 is going to substantially accelerate the transition to a clean energy economy. I think it was obviously already an emerging trend, but if you look historically, when you have some of these huge macro black swan type events, then after that you will see whether it's increasing or decreasing trend lines that may exponentially change in a certain direction. And if you look at renewable energy, I think two things that are really going to drive its growth over the next few years and certainly decade. One are the costs, right? Right now, renewable energy is the cheapest way to generate an electron in 75% of the world. So that, plus the fact that there's no fuel cost for solar or wind energy, means in these competitive power and energy markets, solar and wind is going to, and when demand's lower, maybe prices are falling, solar and wind energy will always be able to clear, and they're going to beat gas and coal and other electricity from other generating technologies. So one, there's just the key economic driver, and that's the most important one. Second, I do think in response to COVID and also the economic crisis that COVID has caused, as governments pass stimulus packages and try to essentially invest in a recovery, it's already clear in pretty much all countries, green investments and clean energy is going to be one of the major ways that different governments essentially try to invest and create a stimulus, right? So I think those two trends are going to only serve to increase the pace at which we see a transition to renewable energy over the next several years. Now, I'm sure, of course, in the near term there are, and we know, adverse impacts, right, and on specific deals or companies because of COVID and the crisis. But taking a long-term picture, I think we'll look back and see it as something that accelerated this clean energy transition.
So one good result from a very bad experience, right?
That's true. That is one way to look at it. And I think, as I said, those trends were probably happening regardless. But sometimes these big historic events have a way to accelerate that. And I think you see a lot of, it's certainly us as a solar company. Maybe we're biased in that perspective. But I mean, as you know, and as the listeners will know, it's not just solar companies, right? It's oil companies, it's gas companies, it's the biggest investment manager firms, it's the biggest governments. Everyone is acknowledging, hey, this clean energy transition that's happening. I think probably the biggest question is just the pace at which it does happen. And that is going to be interesting to observe over the next 3 to 5 to 10 years.
So, Andrew, thank you very much for your insights and your time. We're sure they'll be highly attractive to our audience.
Yeah, thank you very much. I appreciate it. And thank you again for the opportunity.
Thank you very much. And we also thank the people who are watching us. See you soon in another Energy Capital interview.